we are getting all kinds of questions about how sustainable what we're experiencing in the equity markets, in the global economy. How sustainable are these new mega trends that seem to be evolving? And I think what's great about big ideas is even we spend all of our time in the research and investing around these ideas. And even we, at the end of the year, as we're summarizing how big these ideas are, we are sometimes stunned when we pull away at how quickly this is happening, so quickly. And the other question we face here is this a bubble? Now, there's a lot of muscle memory around the tech and telecom bubble and bust. And obviously, that was not a good experience for a lot of people. It was their first experience with this notion that the internet, in that case, was going to set off years and years of exponential growth opportunities. And that did happen. It actually happened. But it did take, for some of the technologies, it took 15 to 25 years for the seeds that were planted during the tech and telecom bubble to bear fruit. Now we're ready for prime time. They're bearing fruit. Now that we're here, investors are skeptical. They're afraid that there are going to be disappointments like we experienced back then. Well, back then, what happened is too much capital chased too few opportunities too soon. The costs were way too high, and the technologies were not ready. In fact, some of them didn't even exist. And so, of course, that did end badly. Now, the costs and the technology are at the right point so that we are experiencing exponential growth trends in 5 technology platforms involving 14 different technologies, individual technologies. And what we're seeing, which this is what is astonishing to us, I think, as we talk about this, we're seeing more and more convergence between and among the technologies. And so we're seeing one S curve feeding into and accelerating another S curve upon another S curve. And I think that's why this is happening so quickly. So maybe I can lob it to you, Brett, to riff a bit on that. And maybe we can start with deep learning, which I think has been the big surprise.
Sure. And I think deep learning is actually a nice almost continuation of the internet. But even reflecting back on .com, at least in our view, there really was a single technology platform that a lot of hopes were being put on top of. And one of I think you're absolutely right that convergence, like the capabilities of an individual technology that's itself building on top other technology platforms, they get multiplicative as they converge. And you just didn't have as many opportunities for almost like puzzle piecing together different technologies back then that you seem to now. Like you mentioned deep learning, really that's an area where the pace of change has surprised us. If you rewound the clock 3 years and asked whether or not deep learning was applicable to natural language processing, and really smart experts, experts in the field would say, no, language is too discontinuous. And this innovation of kind of using neural networks to solve complex problems and pattern recognition tasks is just not going to apply there. Well, it turns out just over the past year, we've gotten a proof point that actually it absolutely will. And you will be able to do it in a way that it seems to like produce almost like high school English level compositions generated from scratch by a computer. And so think about like all of the ways in which the world relies upon language to make business processes work, and what a powerful tool automated generation of language could be. And so that's one area where deep learning is clearly having an impact. And then also within the past, I think it's within the past 3 months, DeepMind, one of Google's subsidiaries or Alphabet subsidiaries, announced AlphaFold, which is the ability to take the genetic information in DNA and predict what proteins would be generated from that genetic information, the structure of the protein that would be generated, which would give you an understanding of like what the actual disease or disorder coming off a mutated stretch of DNA, how it will manifest in the body. And so give you a much better chance of targeting a drug against that disease. This is something that it's an unsolved problem for the past 50 years of how to do that. And that DeepMind seems to be able to use the same technology that we're using to solve language generation by computers to also figure out protein folding is indicative of both how dramatically large and interesting the opportunity set applicable to deep learning is, and also within the health space, like you're only able to do that protein folding problem because you have the gene sequencers to sequence the genome to get yourself the information to train the algorithms. And so kind of like gene sequencing and the cost decline there is enabling kind of the deep learning to build on top of it, which will then enable the next, maybe it's gene editing to design the treatment that plugs into that particular protein. So
Yeah, I think in mentioning each of those technologies, we can talk about how quickly costs are falling. So, in the case of AI training, costs are dropping about 37% per year. When costs drop that quickly, uh, really, it unleashes a lot of creativity and problem solving that couldn't have taken place at any other time. And we're seeing AI models growing tenfold per year. I think it's something like that, Brett.
yeah.
These are astonishing rates of change, and it seems like they are unstoppable. Except when you think about that, wait a minute, 10 times per year these models are growing. What does that mean? How are we going to get through all of this? But maybe that's a topic for another day. It's just the change is happening very rapidly.
Well, it's indicative of how much investment needs to go into the hardware to support these AI models, right? Like if you imagine if you can create an AI model that replaces a lot of the sales function of a salesperson or makes that person's job that much easier, makes them that much more productive, then you would pay a lot of money for that if you're Salesforce or another software as a service provider, because the end business will pay a lot of money for that. And since the investment in the model that enables you to do that is a one-time cost, it's basically you're investing in compute, you're investing in collecting all the data, you are training the model, and then you demonstrate kind of the capability and the productivity uplift you get. You'd happily, you think about that as an asset that you have invested in that actually will yield a very high return. And so within the deck, you can see our forecast that, we think the cost to train an individual model could grow to $1 billion or $100 million. However, right, like there's also all of this innovation on the cost decline side. So it's hard to say exactly what each unit model will look like, but I think it's clear that people are doing a lot more investment in the underlying compute capability to deliver these models and thinking strategically about business model setup to make sure they're scraping in proprietary data to then give them an advantageous position relative to kind of the new capabilities being unveiled by deep learning.
We think that ARM and RISC-V are going to displace Intel in the data center, mostly because they can accomplish what we're talking about so much more easily and less expensively than Intel. So Intel's market share in the data center, which is the most profitable part of their business, I believe, we think will go from 92% share to 27% share by 2030. That's kind of a wake-up call for those index funds who have Intel as the largest semiconductor position.
And there it's like a few factors that are kind of headwinds. Apple going direct to its own ARM chips on its laptops will port over the developer base. You can also argue that within the data center, the CPU, which is where Intel is dominant, that becomes less critical to performance as more applications moving to a deep learning environment where they're using accelerators, either FPGAs or GPUs by the likes of NVIDIA. And so then because you're not performance differentiating on your CPU, you're not willing to pay some extra normal premium to kind of buy the best in class CPU. And at the same time, at least in custom chips developed by Amazon and other cloud providers we anticipate in the future, you can already get better bang for your buck on ARM and likely on RISC-V in the future. And so there's a lot of choppy water in the traditional CPU space to come, in our view.
Yeah. And actually, just highlighting that one point, the traditional benchmarks out there If what we're saying about disruptive innovation is correct, and these S curves are feeding one another so that these trends are accelerating, it probably means the amount of creative destruction out there is going to be pretty serious. And I think it will hit, again, the traditional world order, which today is represented by the broad-based benchmarks. So again, it's really important to be on the right side of change when it comes to innovation. I'd like to bring us into maybe a little more quickly. We spent time with deep learning because it is really critical to everything that's happening. But from virtual worlds and digital wallets, Bitcoin, electric vehicles, autonomous automation, drones, orbital aerospace, as you mentioned, the DNA sequencing. AI is going to touch every one of these, but maybe why don't you select the next one we talk about, Brett?
Well, sure. I think a topic that I return to again and again is kind of autonomous taxis. And people are skeptical that we are actually going to be able to deliver an autonomous taxi service, a taxi where you don't have a driver in the driver's seat. And the pace of change in AI informs our view that that is more likely. You have, at least from my perspective, you have to believe it's more likely at the this point in 2021 than you did 12 months ago, because of so many basically critical thresholds neural nets have crossed in domains that you didn't necessarily expect them to be able to perform at the level that they're able to. And what's interesting about, to me, the autonomous taxi space is if you can deliver autonomous taxis, you should unlock a huge market opportunity measured in the trillions of dollars. In the deck, we talk about more than $1 trillion in operating profits accruing to the platform operators by 2030. And so, like, just within equity markets, if somebody's doing $1 trillion+ in operating profits, you should be willing to pay, well north of $10 trillion for that collective set